Welcome back. Well, the equity market has a tailwind with the US crude being lower the $50 per barrel mark and the Brent crude being below the $60 per barrel mark. And Manisha Gupta joins us to tell us why is that happening. Manisha, good morning. Tell us, what does the queue look like from the commodity space?
Well, as you said, the crude oil prices have seen some declines coming in, and we are trading very close to those October 2017 lows yet again. There are reports of big climb up in the U.S. weekly inventories, and there also is a forecast that the record shale output could be now at 8 million barrels per day by the end of year 2018 itself. So that really seems to have pulled the prices down. And of course, the Russian output also is at record highs of 11.4 million barrels per day in the month of December itself. So the markets would really want to see on what the evidence of the OPEC and the allies cut as we get into the month of January. So I think until then, there is going to be some pressure, and the speculative hedge fund positions are yet again unwinding their longs before we get into the Christmas holiday mood from next week onwards. But what has seen strength has been the metal space. If you look at the iron ore prices, they are trading at a 4-week highs in the Chinese markets right now, even as the China data has been on the weaker side. But the China port inventory for iron ore has declined, and there is restocking expectation ahead of the festival season. Remember, December does go into that, and then you have the Golden Week holiday in the month of Feb. The expectation is that in the next couple of months, there could be some buying coming back in case of iron ore, steel, and the ingredients, and that has led to some buying back here yet again. But the gold prices are under pressure. It is about the U.S. Fed meeting that begins today, and there is a likely interest rate hike when the announcement does come in on Wednesday. So the strength in U.S. dollar is something that is also need to be watched on, and that could be also putting pressure on many of these commodities.
Absolutely, Manisha. Thanks a lot for that. The strength in the US dollar is something that we'll keep an eye out on. Meanwhile, from the F&O space, from the equity flow space, while we moved higher in yesterday's trading session, it wasn't matched by cash market flow. So both the FIIs and the DIIs, they sold about 6177 crores in the cash markets reflectively. The flows were pretty feeble or fallow, if you must. If you take a look at the index futures as well at higher levels, there was some selling by the FIIs close to around 320 crores, about 7,600 short contracts added in index futures. With that, their long exposure stands at 47%. That said, the up move perhaps could be explained by a lot of short covering that we saw in index calls. So if you take a look at what the FIIs did in index options, there was some put protection bought on the long side, 6,900 contracts. But if you take a look at the short side, there was close to around 2,300 short calls covered. And at the same time, there were 9,900 short puts written. That's telling you that there is a fair amount of support. So if the markets do not go further lower, the shorts in the system try to run for cover. Another thing that really stood out was the India VIX, the measure of fear or volatility, has been down. It's down to a 13-week low right now. In fact, this month itself, it has corrected about 24%. And mind you, there were a lot of events in this month. The put-call ratio has moved slightly higher from series lows of around 1.33, 1.34. It has moved to around 1.61, still away from the overbought zone of 1.7 upwards. So what are the levels where we saw put writing? 10,900 put. Remember, 10,900 is currently an in-the-money put for a premium of close to around 88 rupees. It saw an addition of 9.2 lakh shares. That's telling you that 10,800 is a firm support for our markets. 10,800 put 2 saw a fair amount of writing. So yesterday's low will be an important one to watch out for. An 11,000 call, which has the maximum open interest, saw some covering of positions, as did the 10,800 call. So let's see where we go from here. The belief is that there could be support on the lower side. One stock that stood out was BEML, 36% open interest addition on the long side after an 8% move yesterday, Anisha.
Okay, so looks like there is a bit of support on the downside, but let's move on and talk about the bullseye corner now. Our contestants this week, Richard Chopra, Ashish Kyal and Sameet Chavan, are battling it out for the strongest portfolio. Let's hear their picks for day 2 of the week.
My first call is a buy call on Engineers India Limited. The stock closed at 117 rupees yesterday. It could be bought for a target of 123 and a stop loss of 112 should be kept on the stock. My second call would be a buy call on McDowell. The stock closed at 636 rupees yesterday. It could be bought for a target of 648 and a stop loss of 628 should be strictly kept on the stock. My third call would be a buy call on Voltas. The closing price of the stock was 567. It could be bought for a target of 575 and a stop loss of 560 should be kept on the stock. And my final call would be again a buy call on Raymond. The stock's closing price was 857. It could be bought for a target of 867 and a stop loss of 847 should be strictly kept on the stock.
First call for today on the buy side is going to be BEML, and long positions can be created in BEML keeping a stop loss of 823 for the target of 914. Next stock on the buy side is going to be Jubilant Food, and long positions can be created in Jubilant Food, keeping a stop loss of 1241, expecting a target of 1379. Another stock on the buy side is going to be KEC, and one can create long position in KEC, keeping a stop loss of 292 for the target of 325. And the final call is on the buy side is Page Industries, and one can create long positions in Page Industries, keeping a stop loss of 24,150 for the target of 26,900.
Our first call is a buy call on Vocard for a target of 588, stop loss 509. Second buy would be on MGL for a target of 938, stop loss 869. Third buy would be on UBL for a target of 1390, stop loss at 1260. And final call would be a buy call on Kansai Nerolac for a target of 498, stop loss 457.